Hey everyone, Palantir reported third quarter financial results recently, and so what I've done is updated my recommendation of Palantir stock. That's what I'm going to share with you in this video here. Before these earnings results were announced, I had Palantir stock rated as a hold. I had brought Palantir stock back down to a hold after I recommended Palantir stock as a buy earlier in 2023, and then after seeing the stock price rise by so much, I said, all right, it's a good time to take profits in Palantir stock and bring it back down to a hold. So you're going to want to tune in to see if I'm upgrading or keeping Palantir stock as a hold. But to do that, I'm going to review the company's latest earnings results so that I can justify my reasoning for why I'm keeping or changing the recommendation. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So let's jump right in, starting with the company's commercial business. And this is an area I was watching closely because Palantir has an excellent relationship with government institutions. It's done a good job entrenching itself there, but it's had a difficult time with commercial businesses because Palantir, as good as its services are, they are expensive. And so they're not affordable for many businesses worldwide. And that's an area I was hoping Palantir can make more progress in decreasing its prices so that it can be available for more businesses. And we saw here in the third quarter, 33% increase in U.S. commercial revenue. That was great news, year-over-year growth there. And the total commercial total contract value with businesses increased to 252 million. That was up 55% year over year. That was good news because this part of the business was struggling, and it's good to see it accelerate again. Another thing I've liked about Palantir is the improvement in profitability. This is the primary reason why I upgraded the stock to a buy earlier in the year, is because I noticed the 2 consecutive quarters of GAAP profitability, 31 million and 17 million, and then I upgraded the stock to a buy. And then it continued its profitability, 28.1 million, and in the most recent update, its net income increased to 71.5 million, and management is forecasting a continued profitable bottom line in the fourth quarter. So that's great news for Palantir stock investors. And it's not just Palantir's bottom line that's improving, it's also its operating income, which in this case, and I'm going to share with you why this is especially important for Palantir, the difference between operating income and net income, because it has this unique scenario right now where this difference is important, and Palantir is demonstrating growth in operating income as well, from negative 62.2 million in the third quarter of 2022. That's jumped all the way up to 40 million in the third quarter of 2023, with consecutive steady improvements in each and every quarter along these last several quarters. Palantir has done a great job of increasing its revenue while keeping its costs under control. I mentioned earlier that the commercial and government business is the two segments that Palantir reports, and it's got more success in the government business, and you'll see that here. Overall, revenue in the third quarter for U.S. government business, its U.S. government segment, 229 million. That was up by 10%. That part of its business is more than twice the size of its U.S. commercial business, which had revenue of 116 million in the quarter, but that grew by 33%. Excellent. I wanted to see the commercial side of the business accelerate, and this is what we saw in the quarter. Unfortunately, that was just for the U.S. side of its commercial business. The worldwide international side of the business continues to struggle. And you can see that here, commercial revenue growth overall, this isn't just for the US, this is overall, grew by 23% year over year to 251 million. Well, if the total growth was just 23% and the US growth was 33%, that means everything outside of the US actually declined. And so that's a bit of a concern, but nevertheless, it's excellent that the company's commercial business is growing and is growing faster than the government side of the business and closing that gap between the commercial and government side of the business. So for Palantir, Billings is an important part of the business because that entails what Palantir's revenue will look like over the next several quarters and perhaps over the next several years. Palantir engages in contract sales where its clients purchase Palantir services and use them over the next 12 months, 24 months, or 36 months. And so if they sign a contract, if they sign a deal, that's going to bring in revenue for that time period. So it was a little bit concerning to see that billings only grew by 8% to 550 million. The billings growth was considerably lower than its revenue growth. The billings growth was lower than the revenue growth. And if billings continues to only grow at less than double-digit rates, then that means in the future, the company's revenue growth will also start to decelerate closer towards its billings growth. That being said, Palantir demonstrated another positive sign in an increase of customer count by 34% to 453. For overall customer count, for just the commercial side of the business, it increased by 45% year over year. Solid. I like to see Palantir growing the commercial side of the business. Also, I like that it's growing the commercial side of the business faster than it's growing the government side of the business. And I've said that several times now, and let me explain why I like to see that and why I'm not so thrilled about the government side of the business. And that's because the potential for enterprise, for Palantir to penetrate the enterprise market is much larger than the potential for Palantir to penetrate the government business. There's a limited amount of governments worldwide. There's a limited amount of government institutions worldwide. But the business, there's millions of businesses worldwide. And if Palantir can make more headway there, the total addressable market is much larger in that category. So Palantir has $3.3 billion in cash and cash equivalents and U.S. Treasury securities with no debt. And here's why I mentioned earlier that it's important for Palantir to demonstrate growth in its operating income in addition to profitability on the bottom line, because Palantir is benefiting from this $3.3 billion in cash. Right now, government bonds, you can get a 5.5% yield on a 3 or 6 month government bond. And so Palantir can put this money in government bonds, and at 5%, it can generate 150 million per year or higher in interest income. And that can go to its bottom line and help the company look more profitable than it actually is. Because investors, when they're looking at the profitability of the company, they want to know the core operations of the company is profitable. It's not as impressive if the company is generating profitability because it's depositing its cash balance in government bonds and generating interest income there. Every individual investor can take their money and invest in government bonds and earn that same 5.5%. Why would you want to pay a company to do that for you? So for that reason, I mentioned it was impressive that Palantir was demonstrating growth in its operating income in addition to growth in its bottom line. And the bottom line, net earnings, is benefiting from the interest income. Operating income doesn't benefit from interest income. Interest income comes after operating income. And so operating income is the company's core business operations, and it's demonstrating it is indeed growing profitability in that segment. So far, 2023 has been better than expected for Palantir, and so management is raising its revenue guidance for the year to between 2.216 billion and 2.20 billion, and they're raising their adjusted income from operations guidance to 609 million at the midpoint, and reiterating that it will be GAAP net profitable in each quarter of the year. No doubt about it, 2023 has been an excellent year for Palantir so far. The rising effectiveness of artificial intelligence and businesses' desire to not get left behind the AI trend, This is an area Palantir excels at, and so that's helped boost the company's services and demand for its services, to be sure. I mentioned earlier about the company's billings growing year over year 8% to 550 million. That was up from 509 million from the third quarter of 2022. But taking a deeper look into its billings, we see another positive trend here, and that's the long-term remaining performance obligations continue to grow. And that's a good sign for Palantir because earlier in 2023, businesses were much more cautious in signing longer term contracts because they were uncertain about the macroeconomic outlook. And so Palantir's growth was coming from short term performance obligations, short term contracts it was signing. But in recent quarters, in the two recent quarters, it's accelerated long term remaining performance obligations. You could see here it was dropping from 699 to 456 to 407, and for two straight quarters now from 407 to 410, and from 410 to 428, it's accelerated its long-term remaining performance obligations. That's a good sign for Palantir that its customers, its clients are becoming less cautious and willing to sign longer-term contracts. That's good news. So after looking at Palantir's recent quarterly performance, let's take a look at its valuation so that I can update my recommendation of Palantir stock and let you know if I think it's a good stock to buy right now. And looking at Palantir's price to free cash flow of 103, that's pretty expensive looking at price to free cash flow. Even though Palantir is doing an excellent job increasing its free cash flow, a price of 103 is a little rich for me. Looking at its forward price to earnings at 66.94, that's also looking expensive. So whether I look at Palantir on a price to free cash flow or a price to earnings forward, the stock looks expensive. Admittedly, the performance is also excellent, and Palantir deserves a premium valuation, a growth dependent valuation, because it is growing profitability, it's growing sales, and it's growing cash flow. That being said, I think the stock is a little too expensive to upgrade to a buy, so I'm keeping Palantir stock rated as a hold. But I wouldn't be surprised if there's a dip in the stock price if I change my recommendation and upgrade it to a buy. This is one that I've upgraded already in 2023 earlier when the stock price got more favorable. I upgraded Palantir stock to a buy, but the valuation quickly increased and I had to bring it back down to a hold because it got so expensive so quickly. So for those reasons, I'm keeping Palantir stock rated as a hold, but it's approaching a buy if the stock price dips and offers a more attractive entry point. All right, but before I let you go, if you've gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you for watching.